Welcome to video 3 of 12/29. The year is almost over. I am Nick, your host for tonight. All right, enough of the silliness. It is Sunday, and we are silly. So this is Nucor. It just lost a really important level. It didn't need to lose. That opened the door for $30 of downside. Okay, if you do the math, that's below 100. So even though this is falling into support, and it is an opportunity to go long if somebody that wants to start a position investing, you could get a bounce. I think the bounce will fail into 136. So the idea is there's a lot going on across the world in steel production, especially in England. So you better educate yourself on the fundamentals there and what the governments are looking to do and what not to do. Technically, there is support scattered from here through 88. Technically, there's resistance loaded from above 136. So you're relegated to ping-ponging inside of here. So there's not a panic. I would rather sell puts to own shares in this company than just buy shares outright. NVIDIA, look at where it's at. All right, so let's zoom in for a little bit more constructive comments. If the market is going to be higher, NVIDIA should be much higher than here. Nevertheless, it is in the hands of seesaws right now. The high from last week is a catalyst that could get you 150 or higher. The lows from last week should be solid support. If for whatever reason this stock loses 126 on a closing basis, I think it tests the low teens. And that's not my forecast. A lot of support. Look at it. Anything below that blue line. They already went halfway through that blue line, a little bit more. So they lost this blue line, and they're trying to recover it. So you can put a stamp on that recovery process by taking out 142. Investment-wise, you can be long. I wouldn't add, though. NVO. So this, they tell me, was on the fact that the results were like infinitesimally less positive in how much you lost off your waste. If that's the case, I haven't verified, so you do your homework. It is a ridiculous drop. The P&L is solid as hell. However, this is the kind of stock where legislation could end it, right? That's probably why people are freaking out. You may get a headline from the government. You cannot sell this drug for weight loss anymore. Boop. That's the end of it, right? Anyway, do your homework. Technically speaking, the loss of this 100 should yield 75, where you have better support. Now, this is a stock I would go long. If you believe in the earnings power to be sustainable, I would sell puts to own shares with confidence. It's not my style of stock because of this headline. They're so prone to headlines. And if you're a seller of risk, that's your enemy. Out of the blue headlines, you can't forecast. NVX. The opposite of the P&L of NVO. I would not get engaged with that. Is this the same person, these penny stocks? Okay. So if you're trading them, comments, 140 needs to hold. Otherwise, I don't know where it goes. I don't see how it can take out 220. Oxy, we're building another round of disappointments. Was I right? Yes, I was. To the penny. Look at this. Not even a penny more. Look at this. And there's still reasons to come down to 43. So let me rephrase. The bounce can go to 53 and 55, and that's going to be incredibly difficult to overcome. Why? Because this is where they fell from. They lost 56, triggered this bearish downside target. They try to recover it immediately with this rally. That was a pretty big rally. And then they made a lower low. So what am I saying? They're selling rallies for the last few months. This is another rally that might be sold and produces a lower low. I'm not bearish on the stock here. The way it rose was pretty stupid here. And I remember why. And we had a lot of discussions on that. For me, 35 or lower would be interesting. So if you can get long below 35 by selling puts down there, I would be fine with that. 38 or lower. So if you can sell a put to own shares inside this zone, that would be good. Pfizer. Everything I said about Moderna kind of applies here, except this one has a pipeline that is, and has other drugs other than just you know what. I'm reserving my words because the algorithms will catch the video and delete it months later, which is the stupidest thing in the world. 28 through 29 should be tough resistance. But if you clear 30.5, that one right there, you might end up at 35. This is a good value as a stock. If you trade and invest in therapeutics and medical companies like this one, this is not a bad entry point. The only thing I have with it is the problem. Why is it so low? If the company is so good and the market is so good, why is this one so hated? And it's a rhetorical question. But this is definitely not a place to short it or exit longs if you're still long it. It's a place to start a position long. In fact, is it on my list? Because I'm always looking for trades that don't suck. And this one, it wouldn't suck to own the stock lower, half position. This one, it would suck to own the stock lower. I'm holding a put and it's losing money fast. I like this company. I said get long a long time ago. Up here, the easiest statement, this is not an obvious point of entry. A couple of days ago, I said it's either going to 100 or 72. We'll see if it's on its way to 72, or is this bounce going to go to 100 from here? I don't think it stays here. It's either going to 100 or 72 in the next couple of weeks. I would sell a credit call spread if I wanted to trade anything on it. Qualcomm. Good company they own for the long term. Buy the dip in Qualcomm. P&L, look at it. It's unbelievable. They're responsible probably for every piece of brain in your pocket. Every cell phone has a Snapdragon chip in it, and that's theirs. So if you like ARM, you should like this one. If you like mobile computing, fast, efficient, you like this one. Technically speaking, they better hold this level. They're at risk of drifting lower towards 138, which would make an unbelievable entry point. It's okay here, but I wouldn't add to my position. Rallies into 172 are going to be sold hard. So we'll see. Actually, resistance starts at 164. RBLX. This company has a lot of earnings power, but I'm not a fan of the chart. Every chart that went to the moon during the period of time that is unmentioned is a no touch for me. Okay? If anything, if you twist my arm, I would short it by buying a put spread long term. So risk $200 to make $300 on a $5 wide spread, or a little bit wider for a little bit more money, because I know they will hate it soon enough. Let's put some numbers. 56 needs to hold. If you lose that, you go to 52. 56 will cause you to lose another $4. Conversely, if you take out the high from the last couple of weeks, you can get to 65 or 66. So it is pinching. Higher lows, lower highs, move coming, direction unknown. If you're bullish, you hold your calls, you hold your shares. We're going to 66. If you're bearish, you hold your puts, you hold your credit call spread or debit put spread, and you see if we can catch a dip. I'm in neither. Neither of those two sound attractive to me. Okay, I'm going to guess this is quantum computing. Short. If you twist my arm, I will buy a put and run it into the ground and do it put diagonal. My take on quantum computing. So I'm an electrical engineer, so I'm not an expert in computers, but I was around when computers were getting built. So my schooling was like how to build components that build the computer. So I know a thing or two about technology, and you develop an instinct of sorts. The instinct tells me here the application of supercomputers into businesses' P&Ls are not as exciting as these guys make it out to be. But if you're making a supercomputer that you can sell to big companies, you do have a good future. So do your homework on that front. Is Rigetti one of those? The chart is not going to help you with anything. But just know that there will be a handful of winners, super big winners, and flops. So Just know how can they make money. It's by selling the actual units to computers that to companies that may or may not want to use them. I'm going to bring back one of the most famous companies on the planet, as ridiculous as the headline came out. That was the level of ridiculousness in the pot stocks of 2018, which is Alphabet. Yes, Google. The headline was, our computer chip, quantum chip, processed whatever math problem or whatever problem it had, faster than, no, they said it's something like a regular computer, I don't know what they mean by regular computer, would have taken it more than the age of the universe to do what we did. Talk about a BS headline. If you're a data company and you've got a supercomputer, couldn't you give me a freaking number in that headline? Anyway, there probably is a number, some 16 centillion, whatever. And then to follow it up within days as a headline is like, oh, our computer is so fast, we discovered a parallel universe. I'm out. When we're talking we discovered parallel universes, I'm out. Yeah. So a lot of hype. Make sure you're not chasing a hype. Chase real stories. Rocket Lab. Good trend. Good support through 22, 21. Lose 21, you probably get an entry at 17. Meanwhile, you should expect them trying to get to 32 maybe. We'll see. Shake Shack. They're buying dips. That's pretty impressive. Not as impressive as Kava. Between Shake Shack and Kava, I prefer Kava. I used to do a P&L slicing and dicing for 400 restaurants, so I know what I'm talking about restaurants. This P&L is not as attractive as Kava's, although a more established business. I like Kava's chart better than this one, or situation better than this one. 125, super strong support that needs to hold. If not, then you get 117. Meanwhile, the opportunity is to make another higher high, and you probably will get $12 out of it. Schlumberger, again, why is it falling out of control when the market cannot stop rallying? And the fact that they lost 40 is problematic to me. There is no support. That's what happens when you rally. Silly. The support is spread from here to 32. That's problem number one. That's $5. What is that, 16%? And on top of it, it's old, from 2022. This whole rally was ridiculously silly. P&L flat as a pancake. Why do you run it to high heaven? So, vulnerable, to put it nicely. Vulnerable. They need to recover to 41.50 for me to feel less vulnerable. If they get to 42, breathe a sigh of relief. But that's, 20%. So if you think we're headed there, hold it. If you bought it at 42, I wouldn't add here. I think you might get a lower entry point. But it's not a panic situation. Like, it lost a lot of weight already. Silver. You better hold 26. Otherwise, you're going to 25. You might be already pricing in these purple lines that I drew months ago. Let's zoom out and see where they came from. Okay. So at some point around early November, I drew this purple box that I said maybe that's what they're drawing a right shoulder. Right here, right shoulder. To finish this head and shoulders in purple, of which we'll have two targets. One, my target. Two, the official target. So it looks like they came close to my target and they're trying to avoid finishing it. And then you would have serious support. There's a lot of support into 24.5. You see it right here. But there's support also in between, including where we are. So it's okay for somebody to guess that we're going to get a bounce. We probably can, but it's also not okay to ignore the fact that the bounce is going to face a lot of sellers around 28. So 28 versus 26. Which one breaks first? Snapchat. I would not consider going long that company for an investment. Management is questionable at best, not to call them dumbasses. I would like you to guess. I've said it for a long time. Do you know what their business is? If you say social media, you're wrong. They are a camera company. What, Nick? You're crazy. I'm not. Go to their website. That's what it says. We are a camera company. unless they change their tune, they call themselves a camera company. So let's just say, Kodak, not for me. Good solid support below 10 from a stock perspective. So if you're an investor for the long term and you disagree with me, that is fine. If you just entered it, you're close to pretty solid support. It could be 20% lower, but those are small dollar amounts. So if I bought shares, that's probably the sanest way of doing it. Or do the alternative, which is to sell a put and buy a call spread of sorts. If you want more details, reach out. Above 13, it goes to 16. And that's the kind of stock that can do something like this because of the silliness of it. Look at the P&L, fairly stable. Look at the price action, on crack. Therefore, I don't trade these things because I don't have an advantage. It's illogical in its trading because of inexperienced people mucking up the waters and Reddit. So I remove myself and I play on a different field that has me having an advantage because it follows rules and regulations. This stock is on crack. I don't do crack, so I avoid it. Snow, also on crack. So look at how active this stock chart is compared to a pretty flat P&L. It is vulnerable. This gap here, I don't know what they said. My goodness. I mean, what did they say? We're going to double our sales? Let me say it very gently. Don't be surprised to see it at 133. Do whatever you want with that comment. Okay? And what is it going to take out 190? I would be selling rallies here. Quote of the week. I don't do crack. I love it. I got to remember what I said. That's pretty gold. All right. So who is this? Synopsis. I'm going to tell you one thing. I wish I had seen this before. Candles like this are harbingers of extreme continuation of the flip side. In other words, next time you see a stock out of nowhere pop into an island candle and within 2 candles has reversed, that thing carries a lot lower. So they're falling into support. I wouldn't be surprised to see them lose 458 and go down to lose 400. And that's not my forecast. Like I wouldn't buy a put for it, but if I own shares, that would stop me from adding here. And it would cause me to sell rallies. So better hold the support. And resistance is above 530, 528. Intensifies at 544. If I'm long for a trade and I get an approach above 528, I'm out. Sound Hound. The chart itself says bearish, but this is not a story about chart. It's a story about buyouts and whatever. This name, in case you don't know, is tied to other companies investing in it, I think primarily NVIDIA. So please do your homework on that front. The chart is not great help. The chart says it's going to go to 17 or 15 in the next couple of months, but I don't know that it's not going to 100. You know what I mean? When that's where my skills get neutralized by the threat of headlines. Illogical. And if I don't have an advantage, I leave the room. Square. I would have shorted the rally. Did I? I think I did via credit call spread. Didn't we short it? Or was that Shopify? Anyway, I think it's probably the same comments for both. I like the company. I think it's rallying on the back of Bitcoin because when it fell on the back of Bitcoin too. And, I was a buyer down here. I definitely am not a buyer up here. So somewhere in the middle lies the truth. So if it approaches 70 again, you could convince me to sell some puts and put spreads. Until then, the P&L is not improved. Yes, they overshot to the lower end, and they're overshooting the upper end because they look left and they say, oh my gosh, this thing was 250, 200, 290. Wouldn't it be great if it goes back to 290? Okay. That would be awesome. Not going to happen. Never. I'll put it down here. This will never be at 290. What did he just say? Next time it goes to 290, come at me. I'll put on a pink tutu and dance in the street and post it on social media. There, record that clip and come at me. 82 is doable in the next couple of weeks. Support is from 82 through 72. So you do have a wide band of support. I don't hate the company. I hate the price action in the stock. Stanley, Black & Decker. Oh, okay. So this is one of the ones I went long and it wouldn't stop falling. Luckily, we went long with a credit put spread, and I believe it's at 80. So we're right there. Mine was literally 1, just so I'd have it on my books. So if I close it now, I would have lost $100 and some. And if that's your case, you might want to do that. This is pretty solid support. Look at it. Multiple times proven. So for me, if I decide to keep my puts, sold puts open, and the stock, say, falls to 76, I would take the shares, sell my protection leg, and sell the whole thing for break even-ish. But if you've never done that, it's pretty scary. The market is teetering. Use rallies to exit that position. That's addressing my position. Now, addressing the stock itself, this is a good place to start an investment position in it. Look how volatile the stock is, even though this P&L is so solid. So if I'm long the stock, I'm not exiting here. It's too late. If it loses 77, you might end up at 66, but a bunch of support in between. It's a scary proposition, yes, but the position was not an all-in position. So if I took only half the position, then I wouldn't add now. Symbiotic. So I had it on my to-do list, and then I took it off. I like robotics for the future. I just mentioned that. And this one, I think, comes with a little flavor of accounting irregularities. So that takes it out of my playbook completely. I might be overreacting, but if there's fire, if there's smoke, there might be fire, and I don't want to be there. So do your homework. This is a good place to be long this company with room to add. Toll Brothers finally doing what I think it should have done, and now could be that it's in the hands of the sellers. Okay, so I know people who are smart and they are accumulating positions in that. You can, but you have to be really good with options. Okay, if I bought shares at 160 and I'm adding here, I'm making a mistake. This thing can go to 100 in the next couple of months. Yes, 100, technically speaking. We don't know where they want to stop it. There's a gap down to 114. And the gap doesn't really matter unless you're headed towards it. And then it becomes something that people look at. That's how silly they are. There's another gap down to 105. And then another gap all the way down to 88. And another gap all the way down to 76. What am I saying? This chart is like Swiss cheese. You don't know where is the pothole, if at all. So consider this. We have bought dips for a year. Extremely well. Too well. And now we are losing support levels that we shouldn't have. So let me rephrase. I don't think we can re-breach 144. And if we don't, we are at risk of drifting towards 112. And if we do, we are creating a sell the rally algo. Remember that word, algo. I'm going to address it in the Sunday or Monday morning video. Okay, what is the market going to do? We are buying dips on this time frame. We are not buying dips on this time frame. And this is the next closest. Let me go to 4 hours. We are not even buying dips on a 4-hour time frame. We have lost the edge. So now we are selling rips. That's a fact now on this time frame. So take out 146, 144, get to 150 for me to start believing that this is just like the old one. They're going to go back and take another high. So be careful on how you engage with the stock. It's vulnerable. TripAdvisor. Yeah. Pretty active chart. Yep. 16, 15, 16, hell of a lot of a resistance zone. Anything above 17, I would be out. People see this, oh, this is a cup and handle. It's going to go to 22. Maybe, but not with my money. Because why wouldn't it go to 10? And I'm serious about that. They're selling rallies in a massive way. And this stock has a decent chance of losing 12. And if you do that, why not 10? Not for me. You do have a huge candle to trade on the long side. So if you went long against this large candle bounce, yes, that's correct. But if you lose that, you're going to lose 12 altogether. And there are a lot of sellers scattered. So if you're a trader, awesome. If you're an investor that started a position, that's also viable. Tesla, I would be short. I don't need to say much about it, except that my thesis for being short is, mind you, I just lost money being short on a one credit call spread. So a couple $100 on that one, not a big deal. But the thesis to be short here is the rally fuel is based on misunderstanding a headline and an opportunity to make money. That's it. I'm just going to say that. People are chasing it for the wrong reasons. And we did issue a short here that was in the live room, and that was an amazing short. They retraced it, and they couldn't beat it, right? So this is 2 targets of 3 on this red W. The third target should be somewhere around 413. I argue that if it gets to 413, it's probably going to get the 380 and 370. And therein lies the short opportunity. So sell rallies. If you're long, that would be my case. And with the opportunity being for the super bullish, if you take out 470, you can probably go to 520. So you should know that if you short it, you should be shorting it with kid gloves, as they say. I don't care about this ticker. Everything I said about Tesla, applies here. I don't think you need an accelerator for Tesla. The stock itself is exciting enough. Now, if you tell me this one pays a dividend, then that's fine. But be aware, I'm very leery of anything that sounds too good to be true. All right? So you've been warned. I have to tell you, look at the chart. There's no volume down here. Losing 29 will take you to 22 quickly with this one. So be careful. Uber. I think Uber is in deep Bandini unless the CEO is really strong. I liked the company when it was just, the goal of Uber was to become an aggregator of businesses. They haven't been able to do that. And I know they're scamming me every time I use them. I get like 3-4 receipts for one trip. Why? Just send me one freaking receipt so I know what the price I see and what I end up paying. So they are still a people mover company. And the way forward, I think, is for him to partner up with Elon. Elon should not get into the business of taxing people around. He should probably provide the shovels and jeans for the gold miners as opposed to chasing the gold. Go to Dara from Uber and say, I got you. Get rid of your people. Here are cars that do the job of your people better, cheaper. And you and I will split the profits. They should form a company together and partner up with Tesla. But I don't know that. So anyway, Uber, strong support through 54. I don't think it's going to be easy to lose 54. And if you do, 46 will be even stronger support. I don't like the way their business model is progressing. That is not the original Uber I liked. ULTA. Good bounce, not an obvious entry point for me. The consumer is dead tired. People are going to be chasing that gap. Let them. Halfway through the gap, short it, and you'll be fine. If I'm long, I'm out. UNG. So I went long for us once and talked about going long again. Up here, not an obvious entry point. I don't know much about the business. If it takes out 17, it could go to 20. Meanwhile, buy the dip back into 1350 would be a more logical way to do this. Targets, 1470 is one, 1390 is another one. Uranium. Okay, so people tell me, nuclear power this, nuclear power that. I will say it's just like pot stocks of 2018, but I don't know enough about it. I'm not an expert. But it feels like every energy company, regardless of how sucky their P&L is, they're rallying to high heaven. If you believe in the concept, this is a place to be owning shares, selling puts to own shares. There's risk of downside. There's risk of hitting 23, and if you lose 23, maybe even 19, but you got to start somewhere. So I wouldn't mind starting a position in uranium, whatever this ETF is. Look as to what companies are in it. As long as it's not one or two major companies, it could be an easy way to capture this nuclear future. And if you're an investor for that perspective, just buy half the shares you want. If you want to invest $2,000, just spend $1,000 here. And if it drops down to 20 or lower, you spend the other $1,000 to build it up. Those are fictitious numbers. Use numbers that are appropriate to your account size. Didn't we do therapeutics, Vikings? Okay, so again, I don't know what you want from me. There's no income. It's all about the homework of the company. Find out what they do. And if you want chart information, they're vulnerable to get to 38 and they better hold it. You lose 38, I don't know where they go. 33. Meanwhile, what's it going to take out 50? It's going to take a giant headline. And if it doesn't come, I think you're likely to drift lower. VOD. Oh, Vodafone. Wow. Okay. Blast from the past. Falling into a solid support zone. I don't know what they do. Is this still a phone company? Support through 8. If I own it, I'm not getting out. If I wanted to own it, this is where I would start the position. VOYA. What in the world? Is this the same person asking for both? Because that's from about the same era. Is this VoIP? No. Finance. Oh, yeah. VOYA. Wait, that used to be a different company. They changed their name. Orange something. Is this ING? Is this the old ING? Yeah, I don't want to touch this thing, whatever it is. It is falling into support. 59, 56, all support from that perspective. I would sell rallies, though. Rallies looks like they're going to hit a wall at 75. VRT. Who? Vertiv? Design, manufacture, service, critical digital infrastructure and powers. Okay. It can rally to 128. I will be a seller up there as a trader. You have a wide range of support, that blue box. So you could get a bounce to 126, 128, and it will face a lot of sellers. Meanwhile, you could also drift to 102. So it's stuck between solid support and backup support and a lot of resistance at 122 or higher. Are these my lines? Yeah, I'm going to use it. Move it to here. And then this one is still there. And we can make up another one on the fly. Right here. Walmart. I've heard of them. What, a cheeseburger place? No, not a cheeseburger place. I am short Walmart and losing a little money. And I still think it's vulnerable to come down to 87 from a trading perspective. The P&L is too boring for it to look like this on a stock chart. This is too expensive. And this one, I can definitely attribute valuation for it. I'm going to have to roll my short. In other words, if I did this and I'm losing a couple $100, I'm going to take my loss and re-engage for February short without adding money. So if there's still $300 left, I'm going to redeploy $300. And why am I so against it? Because this P&L does not match, this P&L does not match this stock chart. There is no way in hell this makes sense for Walmart. They will need, they will need a statement like NVIDIA, like we're going to quadruple our sales or something. So statistically speaking, valuation, the price to sales is not high one, okay? Let's look at the statement first of all. Is this a growth company or not? It is not a growth company. Single-digit growth is just a mature, profitable, solid company, right? So PE, using the price-to-earnings valuation, is totally realistic. From this perspective, the PE is almost 40. That is pretty dang high, on the high side of things. The price to sales is what freaks me out. It is not an appropriate metric for a growth company, for a non-growth company, unless it's detrimental. In other words, I wouldn't I wouldn't want, anyway, this is the stock price has grown, is now double what it was compared to the sales per share. So it's priced like a growth company, but it isn't. So the stock is vulnerable. That's my thesis. The company is outstanding. The financials are beyond reproach. It is the largest employer on the planet for a reason. So I wouldn't be surprised to see it at 84, 76, maybe even at 70 if the market corrects 10%. This is not a stock that should look like that. And with that, I bid you adieu. Folks at home, hopefully you enjoyed these videos. People here, thank you for being here on a Sunday.